China's consumer inflation, surprising turn of events. China's economy, the world's second largest, has been a topic of concern for many due to its persistent deflationary pressures. However, a recent development has caught the attention of economists and investors alike. China's consumer price growth has accelerated to its fastest pace in over a year. But what does this mean for the country's economy and global markets? Let's dive in and explore this surprising turn of events. According to data released by the National Bureau of Statistics, China's Consumer Price Index, CPI, climbed to 0.7% in November from a year earlier, following a 0.2% rise in October. This increase matches the median forecast of economists surveyed by Bloomberg. While this may seem like a small change, it represents a significant shift in the country's economic trajectory. But here's where it gets interesting: the widespread deflationary pressures that have plagued China's economy for so long are still very much present. So, how can consumer price growth be accelerating at the same time? The answer lies in the unique dynamics of China's economy and the specific factors driving this recent surge in inflation. One key factor is the country's efforts to stimulate its economy through various measures, including infrastructure investments and fiscal stimulus. These efforts have helped to boost demand and drive up prices, particularly in certain sectors such as construction and manufacturing. Additionally, the impact of the global supply chain disruptions caused by the COVID-19 pandemic has also played a role in driving up prices in China. However, it's important to note that this acceleration in consumer price growth is not expected to be sustained. In fact, many economists predict that inflation will remain low and stable in the coming months, as the effects of the stimulus measures and supply chain disruptions fade. Nevertheless, this recent development serves as a reminder of the complex and dynamic nature of China's economy, and the need for investors and policymakers to remain vigilant and adaptable in their approach to the country's economic challenges and opportunities.